In this video, we're going to talk about Peter Lynch, investment advice for beginners. Before starting the video, please do like it and subscribe to the channel for future updates. All right, now here are a few of the most common questions and answers by Peter Lynch. What do you need to become a great investor? Well, the stomach is the most important organ in the stock market. It isn't the brain that is causing the problem. The quantity of terrible news you can hear on your commute to work is now practically unlimited. So the issue is, are you up to it? Do you really believe that common stocks will be the place to be in 10 years, 20 years, or 30 years? You should have some money in equities funds. If you believe that, it's a matter of determining your pain tolerance. There will be reductions in the future. It may be as soon as tomorrow. It may be in a year's time. Nobody knows when it'll happen. Is this something you're prepared for? Do you have the stomach for it? The majority of people succeed because they persevere. Despite considerable volatility around the pandemic, the stock market has been on a bull run for more than 10 years now. Is it time for investors to trim their exposure to stocks? Most people have lost money waiting for corrections and anticipating corrections than in the actual corrections. The stock market is a great place to be in for the long run. However, I could now toss a coin. Is it going to be lower in 2 years? Higher? I'm not sure. However, more people have lost money waiting for and anticipating corrections than in the corrections themselves. Trying to predict market highs and lows, for example, is fruitless. How do you feel when the market drops? During the 13 years as a CEO of Magellan, the market fell 9 times by 10% or more. Every time it dropped, the fund dropped even more. As a result, I didn't give it a second thought. Over the last 10 years, 30 years, and 100 years, the stock market has been the best place to be. But you shouldn't put stocks if you need money in a year or two. Consider putting your money in a money market fund. What should investors do when the market eventually tanks? You've got to look in the mirror every day and say, what am I going to do if the market goes down 10%? What do I do if the market goes down 20%? Am I going to sell? Am I going to get out? If that's your answer, you should consider lowering your stock holdings today. How did you first get interested in investing? My father became sick when I was 7, died when I was 10. I started caddying at 11 in the 50s when the stock market was thriving. It moved up all the time, and others were recommending stocks. They'd talk about stocks, and I'd look at them. I didn't even have any money, but I watched them go up. Wow, this looks like a fantastic idea, I said. That's exactly what I did. I performed a report on the air cargo market at Boston College and acquired $300 worth of Flying Tiger airline stocks. When the Vietnam War broke out, they needed to fly a lot of supplies to Vietnam. I believe that was merely a stroke of luck. But I was aware of the motive for my purchase. Air cargo is the major deal, I replied after looking into it. Flying Tiger was only transporting freight, not people. It looks like a growth area, I said after working on it. I believe Flying Tiger helped me pay for graduate school. I'm 75 years old, middle age is 88, and old age is 107. I haven't changed in the slightest. I'm doing the same things I was doing when I was 19 and 20. What's the biggest mistake you see individual investors making? When it comes to buying a house, a refrigerator, a car, the general public is cautious. They'll work long hours to save $100 on a round-trip plane ticket. They'll wager $5,000 or $10,000 on some wild concept they overheard on the bus. That's a form of gambling. That isn't the same as investing. That isn't research at all. That is purely speculative. How should individual investors approach picking stocks? Stocks aren't the same things as lottery tickets. Every stock has a corporation behind it. If the company does well, the stocks will do well over time and vice versa. You need to look into the company, and that's what you're looking into. That's what Fidelity does, and it's what I do. What's a good way to begin investing in stocks? Well, begin by creating a paper portfolio. Then say something like, I'm going to invest X amount of money in the portfolio, say $10,000 or $100,000. It's made of paper. Make it a huge deal. Choose 5 firms to invest in, then ask yourself, why am I buying these 5? If it isn't a case of the sucker's going up, that's one I've tried. That isn't the case. What if it's about this one appeals to me? Then you keep track of them over time to discover what you excel in. Are you skilled at making quick decisions? Do you have a knack for finding bargains? Are you good with little businesses? The fact that the stock went up from $3 to $6 isn't what matters. What caused the price to rise? What happened to the plot of the story? That is the purpose of the research. Has the company's fundamentals improved? How can an average investor get an edge? Do you think you'll be able to examine the company? McDonald's is well known among the general public. Biotechnology and computer software companies, on the other hand, are difficult to assess. So think about it. Do you know anything about the business? What else can you add to the equations? Do you have a competitive edge? You might work as an interventional cardiologist and implant a heart pump. You think to yourself, wow, this is a huge breakthrough, reducing shock and providing hemodynamic support. You're in the operating room witnessing this breakthrough before the rest of the world. That gives you an advantage. You require a competitive advantage in some way. When you're looking for stocks to buy, what do you search for? Well, you want to purchase in the second or third inning and get out in the seventh or eighth, says the pitcher. Think of this in baseball terms, right? When Walmart was a 10-year-old public firm, they only had a presence in 15% of the United States. For the next 30 years, they did nothing but go from 15% to 100%. The stock increased by a factor of 50. They had a winning formula and just followed it in the United States. How do you tell when it's time to sell a stock? Well, choosing when to sell is the same as choosing when to acquire. You have a story about why you bought this. This company is improving from a dreadful state to a semi-dreadful state. And because the company's well capitalized, it will go bankrupt. I'm probably out when the business improves from mediocre to good. Then there's no more room to develop. You sell the company that was once a growth story. Where could they go when Taco Bell was only in Southern California? They went to Central California. Then they were all over the place. It's a 70-year story after all. You must determine when a company is approaching maturity and then you must exit. Alternatively, the plot may worsen. Hold on if the story is still intact. What are your thoughts on the economy's impact on the stock market? If you spend more than 13 minutes a year on economics, I believe you've squandered more than 10 minutes. It's hardly helpful, to say the least. Everyone wants to know what will happen in the future, and I've tried calling 1-800-PSYCHIC hotlines. It hasn't made a difference. The only thing I'd consider is that what's going on right now. What recommendations do you offer for investors in mutual funds? The question is, when you own a fund, do you know what you own? Is this the flavor you're looking for? Do you like real action or something more conservative? We want the people to be happy, you know. We will not direct people's actions. We do, however, have people to talk to. So, what'd you think about this video? Let us know in the comment box below, and please do like the video and subscribe to our channel for future updates.